Welcome back to the Wolf of Queen Street podcast series. Welcome back to the audio podcast or the video series. But before we get started in today's episode, I just want to do a shout out to my sponsors, JobSearchKiwi.com. Job Search Queensland is a company that's helping people find their ideal job, helping them sort out what they need to do for an interview, how to write their CVs, sometimes just answering a call and giving them the guidance and the strength to be able to go out to the market and find that ideal job, what they want to do next. And in the current market, wherever you are in the world, some of this is actually needed. And you can find them at jobsearchkiwi.com. But today I'm pretty excited to have James Blair, the Director of Wealth from Lighthouse Wealth on the show. The last few episodes, if people have been watching and some of the fans of the show, we've been talking a lot about investments, properties, all that sort of stuff around the New Zealand market or across New Zealand and the impact across as well the Australian market with the government changes and so forth. The reason why I wanted to have James on the show is he represents wealth, not just property wealth, but wealth in shares, investments, property, how to get to your retirement earlier, how to understand how to build a plan towards your retirement, whether that is actually just putting money in a savings account. At the moment, it's not really applicable, and I'll let James get on to that. But it is, we need the guidance from people to show us, hey, it's not just down one route where you can find wealth. There's multiple different routes, and there's time that you can take to find your retirement or your number that you want to get to. But James, welcome to the show.
Thanks for having me, Lawrence.
So as I said, a big thing I can imagine, James, at the moment is in the time we've come out of, out of COVID, the impact people had in the New Zealand market and across in Australia as well, obviously the impact of job loss, income loss, uncertainty. I can imagine the word wealth or how do I grow my savings or how do I look forward into my retirement potential is a big question at the moment in the market. Is that what you're finding out there at the moment as well?
I think if anybody sits at home for a year, there's only so many games of Monopoly and Uno you can play before you start thinking about your own situation. Maybe what I find is everybody has a busy lifestyle. Maybe you got kids, a busy job, trying to stay in touch with your friends, you've got family, and thinking about your own financial situation. It's hard to pull yourself back and go, what's going on? And I found COVID certainly engaged a lot of people who I might not have spoken to in the past going, I've actually been thinking about this and that, and what about this as well?
So when you're saying people are contacting you, what would be the main reasons that people would actually call you up in that? Is that to build a financial plan, or is that just to have the discussions of going, hey, James, how do I save more? How do I invest more? What's the sort of guide points where people would reach out to yourself?
Two reasons. Sometimes it's that thinking I want to have my kind of bread and butter is creating a roadmap. Mm-hmm. So going, what is important to you? How are we going to get there? Are we on track? The other big reason people touch base with me is a change in their situation. So maybe they've had their first child, maybe they've received an inheritance, maybe they're thinking about upgrading their home, maybe they've had a loved one pass away recently, they've realized life is short and they want to do something different. Those changes in lifestyle really kick people into action as well.
That's great. It's always something in life that triggers that moment and so forth. But is it in the sense of with the plan and the financial plan you're talking about, depending on the life situation or going into retirement, I'm guessing there's no cookie cutter example as you go across. I can imagine there's different approaches taken on depending on who's coming to you as well.
Yeah, absolutely. Everybody's life is different. Mm-hmm. So like a very typical kind of one where it's not cookie cutter is the how much money do I need to retire?
Yep.
And the whole, well, it depends. It depends on what age you want to retire, whether you're going to have a shack in the bush or you're going to live in a mansion and spend 6 months in the south of France, whether you're going to work part-time in retirement. So no two plans are the same.
And I'm guessing that will be, people come to you with what they're expecting. How are you going to talk through them? Let's talk about retirement. Let's use retirement in this example. So someone comes to you and says, okay, I'm looking at retirement. What's that sort of process? You just heard of what they want at the end, but what's the process once you figured out what the number is? What do you then show them or guide them on towards that number over the time period?
Well, I think in New Zealand, in Australia, it kind of is the role of an accountant in some respects in New Zealand, where in Australia, they don't make decisions unless they talk to their financial advisor. The first thing I find when I talk to somebody, usually they've never spoken to a financial advisor before. So talking to them about what I do, they have no idea what they're expecting. Maybe it's they've got a lump sum and they're not sure what to do with it, or that longer term plan. We always start with going, not like, I look at investments, whether it's shares, Kiwi Saver, investment property, all as widgets. It doesn't, that all those widgets have different reasons that they're valuable, but it's really all about going, what do you want your money to do for you? So some very common ones are, the biggest one is peace of mind. So saying, I just want to have the same lifestyle, James, for the rest of my life. Helping kids is another big one. And then once we know what we're working to longer term, then we can plug in the right solutions to help them get there.
Yep.
And then we put together some projections and go, this is what you're doing at the moment. How do you feel about that? And they'll go, oh, I don't want that. And then we go, well, if you do, if you invest in an investment property, you regularly contribute to an index fund, you get a bit more control over the budget. This is what it could look like. And they're like, oh yeah, I definitely want that.
It totally makes sense there in that part, but I can imagine there's people there at the moment going, James, you're talking about investing in a property and an index fund. You're talking about, large perception of large numbers, savings and so forth towards a plan. So I want to do my retirement. I'm a youngster. I wish I'm 20 years old or 21 years old. I'm a couple of dollars above minimum wage, and James, I want you to help me out. So obviously coming to me and going, hey, how do I do that with going into shares or an investment property? Doesn't seem about the right caliber of what I can do. In those situations, what are sort of the options that people can see or that you were talking through? Is it cost savings in their life, or is it small increment and taking time?
Yeah, I mean, I spent 9 years where if you didn't have $1 million, I wouldn't talk to you. That was just the proposition when I worked for the banks.
Yep.
Now what I love is I can help anybody, and helping people that are younger in life is amazing, because what usually happens is people go, oh crap, at 50, I need to start saving for retirement. If I can get people, I've got customers who are 22, 23 in their first job, and I've got so much time to help them. It's not about making huge gains in short periods of time. It's about compounding interest, small incremental gains. And I talk about wealth as a snowball. So you feel like you're pushing the ball down the hill. It's not really going anywhere. 5 years down the track, you're like, oh crap, this is going all right. 10, 15 years. So for that first job, or for that first person on minimum wage, the first thing I'd say is get engaged about your finances. A lot of people that age are, pissing away their money at the pub. They've got no interest in, retirement in your 20s. Who wants to, who's interested in that? So the first thing you might say is, and there's all these great stats out there going, if you can just contribute, if you're in your first job and you can contribute $50 a paycheck into a long-term investment vehicle, by the time you are retired, the retired 50, 60-year-old version of you is going to be so happy, because it's not about how much you contribute at the start. It's just the fact that you started, and it's those returns growing over time.
It is so true. I just want to go back to the point you're saying, most of the youngsters end up boozing it all away. I'll put my hand up and go, yep. I was very lucky to be earning good money when I was a youngster, late teens, early 20s, and then nothing to show for it. And I can imagine there's a big thing. If you look at a lot of people and they're talking about, if I just knew this 10 years ago, if I knew this 15 years ago, if you're listening to this right now or watching this right now, and it's something that's been playing on your mind, or it's something you want to think about, please don't waste the time in 5 years' time. Just speak to someone out there, because I can tell you that I wish I just saved $50 a week when I was 20 years old. The difference would have been now $100 a week. But it's nice that you said that, James, about the small incremental change, because a lot of the times people forget that when we want to go towards these goals, we're not necessarily talking about goals that are 6 months or 12 months away. I doubt anyone's coming up to you. No, not say I doubt, but I doubt anyone's coming up to you, James, going, hey, I want to have $10 million in my bank, or I want to have $10,000 in my bank, or whatever the number is. And they're going, but hey, I want it in 6 months, because that's sort of unrealistic, from their expectations. I can imagine a lot of it is, I want something and in a time frame which you can work with them.
Yeah. Or we just tell them if they want that sort of amount, we just go Dogecoin.
Dogecoin.
As much
Come
as
on. Oh, you got to throw the Dogecoin in there, man. In the last 24 hours, what has it done? Negative 40%. When I'm recording this episode, just dropped negative. So it was SNL live last night. Dogecoin did not handle well.
Did not do what he was meant to do.
So you've got someone come up to you now, James, and you've spoken about the direction they want to go towards. You're starting to build a bit of a plan, and they go across it. Now, myself, I'm a guy that I love numbers, and I love looking at numbers and dollars. Not saying money in sense, but I like seeing how things are doing. So a lot of people, as we have digital currency that are doing like 500% and 1,000%, and these massive numbers out there. What happens when you implement a plan or financial plan? Let's go again to my 20-year-old self, and I'm doing my $50 a week, and I'm doing my $50 a week. And at the end of the 12 months, this plan that you've given me for retirement has done not as well, in the sense of, hey, shares are doing 10 to 15% at the moment. The property investment returns, if you invest in sort of term deposit property investment type, are doing 8 to 12%. But what you've put me on is only down 3 to 4%. Should I change, or what's going on around there?
Yeah, I've gone through market corrections and quite a few, and customers will always react the same way, going, well, what do we do now? I tell my clients before they start, we go through risk profiles and understand their attitude to risk. But I tell clients that, generally speaking, over time, markets go through 7-year cycles. So there's 3 really good years where James is your best friend. There's 3 kind of boring years where you kind of illustrated before. We go, oh, what's the point of this? And you'd see a perfect one is probably the Christchurch property market over the previous 7-8 years before the last 12-18 months we've seen. And then in that 7-year cycle, there's one bad year. Yep. So that's the year where people are really tested. And we saw that, like COVID, in terms of investment markets, 2020 wasn't actually a bad year at all. But interesting, there was a short, sharp dip in March last year. 40,000 Kiwis went from high-risk Kiwi savers to low-risk Kiwi savers, which just shows how, the human mind works. But the bottom line is, I do not care what happens in a 12-month period. That's not the game I play. I am investing, when we're talking investment property and the share market, I am playing long-term averages. I know what will happen to these markets over a 10-year, 20-year period.
I totally agree with that. When I speak to friends and I invest in shares myself, I invest in direct shares as well as ETFs, which is called exchange traded funds, which means it's one share that literally goes and looks at a whole fund, the S&P 500, the NZX 50, and so forth. And to anyone that has ever understood anything about growth, capital gain, property shares, any sort of thing, will know that in the last 100 years, no matter what, we are better off today financially from those things than it was 100 years ago. So even if you only bought one thing 100 years ago, it would still be worth more now. Other than maybe gold or silver, gold's gone up in the last 12 months a lot. But before that, it didn't do as much. And that's the sort of things when I speak to friends as well around financial wealth and options to grow is, look at some small shares or exchange traded funds that might be $3, $4, $5, for example, a single unit, and look at ways of getting your hands on sort of 5 or 10 of those units. Like you say, $50 a paycheck a month. And then that just builds up over sort of 12 months, 2 years, and 5 years as one of those portions of your investments. And it'll continue to grow because, like you said, people got worried last year with shares doing a dip and they get out, but they don't realize that every the share market, the S&P, the global financial crisis, the bubble, all of that stuff did a single dip, and then it just went straight back up again.
Yeah. Well, over the last 50 years with the S&P 500, there's been 18 years where the S&P 500 has done a 20% or more return, and only 3 years where it's dropped 20% or more. So that over the last 50 years and with an average return of 10%, the numbers are on your side. It's just important to make sure that if you've got shorter term goals, you shouldn't be in the share market, because you want that money to be there when you need it. And also to make sure that you do not have an emotional response when the markets drop, because it's not if the markets will drop, it's when, and they will drop at least every 5 years.
Yeah. And that's the sort of stuff. But I mean, I can imagine, building this plan, and when people see those moments that you're talking through with them going, hey, Lawrence, this is what we said would happen. This is what we said we'll expect. Don't worry. I mean, what was that? It was all over the news last year in New Zealand when COVID hit, that people lost something like 30% of the Kiwi savers, right? Just plummeted. And I can imagine people just freaking out. I did a post a couple of weeks ago in a Facebook group as sort of just as a laugh, going, hey, 12 months ago, everything was dropping by 30%, but yet my Kiwi savers just come up by 30%. So the exact downfall that it has just corrected itself in that time period. And as you said, if everyone bailed out at that moment, all of a sudden everything would be different. It'd be differently to what it's building now forward. You would just got to stick at the goals that are set out around your savings.
Yeah, because it's just going to happen. You shouldn't be surprised when it's going to happen. The other thing that happens is, and we saw it with the housing policy changes the other day, everybody knew that at some point, whether it was this government or another government, housing policy was going to be tinkered with, but the response off the back of it, and customers, some trying to panic sell, is exactly the same as the share market in some respects, where we knew these things were going to happen at some point. How does it change your long-term plans and your long-term goals?
Yeah, totally. One thing I just want to come back into, so we're talking about, from the wealth creation, whether you can go the big one in, properties and so forth, or small, put in a couple of dollars away a paycheck. Do you, from your point of view and assistance and helping people as well, do you also take a look at sort of financial review of someone's accounts and go, hey, James, here's my docket of the last month, and you look through and go, okay, Lawrence, no, you haven't got the cash flow to put your $50 a week, but I can see that in these 3 or 4 areas, if we change this habit, so that old famous saying, if you stop with the Avo and toast, those 4 areas, we'll be able to find that $40 a week or that $30 a month to be able to hit our goal. Is that part of the process when you build the plan or the possible of bringing someone in to look at all those numbers for them as well?
I'm not sure if we're going to sacrifice the Avo on toast, because I really like the Avo on toast. But and the thing is, in this job, even though I've been doing it for 10 years, is I'm always learning, and I can't tell you, Lawrence, I freaking love my job. I really feel like I make a huge difference in people's lives and allow them to have that confidence and that swagger to go and get what they want to get. But one thing that I've learned over the last 12 months or been reminded of is people like doing the sexy stuff. They like doing the investment property, the share market, cryptos, starting your own business, side hustles. It's all lots of fun. I've brought pretty much every customer I've dealt with over the last 12 months back to the fundamentals, which is cash flow.
Yep.
So the amount of people on good money that I see treating their good money like it's always going to be there, which is obviously quite naive, and not respecting their budget and their cash flow, is the first thing that I focus on. So yes, we can find investments that'll give us great returns, but if we can go and have the same conversation all the time, James, I don't go out for fancy dinners, I'm not buying lots of clothes, but I don't know where all my money goes. Pretty much every person I talk to. If we can, so the answer to the question is yes, we do budgeting services, and we use a really smart tool called PocketSmith. And PocketSmith pretty much draws a data feed in from your online banking, and then you categorize your expenses to see where your money's going. And I think it's $10 a month they charge, but I only need my customers on it for like 6 months.
Mm-hmm.
So if you think what you're going to blow $60 to get your budget right, money pretty well spent. But if I can get more of their, and I don't want customers to miss out on, I think it's a balance between enjoying yourself now and making sure that future you is being looked after. But if I can get a little bit more of your income to go towards longer term assets, that will help you grow your wealth, create you with passive income. And then the goal that we're really chasing, especially for people that are maybe south of 50, is they don't really know what they want, but what they do know is they want options in the future. If they want to start their own business or spend more time with their kids. So the budget is the most important like foundation of it all.
Yeah, I totally agree with that. Speaking from a person that's had times where I had the same question going, oh, income's coming in and we're not doing much. Young kids, we're just busy. You get to the end of the month and go, but where's the rest of it? Where's the rest of that income? And then, yeah, it definitely needs that sort of counting up and running a report. And then you notice going, oh, you don't do much, but you're ordering lunch at work every day and you're getting takeaways 3 times or 4 times a week and going to a restaurant, not a restaurant, doing a few other things. And all of that just builds up and builds up without you actually realizing it. your 3 cups of coffee at work at $5 or $6 in Auckland at the moment, and that sort of stuff without realizing is, $1,000, $1,200 at the end of the month just for coffee.
Those turmeric lattes are expensive, aren't
they totally are. So another thing, James, so obviously we're looking at, different approaches to what we can take a look at, but what do we do about once we slowly start building this, what do we get around protecting this stuff? Because we spoke about, looking at it, and then we'll, look at down after year 1, it might not be doing as well, but it's a longer term play, right? So it continues reviewing and ongoing. But what's the protection? Because I can imagine people going, okay, James, you're going to give me a plan to get to $50,000 over the next 10 years so that I can put my kids through varsity, or $50,000 as a goal because I want to do a world trip and something like that. What sort of tips and insights are there around protecting that money once you're getting close to the point of it as well?
Yeah. So there's kind of 3 key parts to the financial plan. There's the strategy component, which is what are our goals? Where do we want to go? The growing our wealth piece, investment, property, shares, Kiwi saver. That's the sexy stuff. That's lots of fun. Then I go, all right, well, let's talk about protecting your wealth. And you can just feel the life getting sucked out of them as I start. And so protecting your wealth is the foundations of any good financial plan. It's not that much fun, but I deal with people where the financial plan all goes wrong and they go, James, can you fix it? Or James, I didn't expect this to happen to me. And if you don't have the foundations, it's hard for me to fix it in hindsight. So the first part of having a good, protection component of a financial plan is having a will. It's crazy how many Kiwis don't have a will, or they've got married, or now they've got kids, or it's not current. Bare minimum, you can do online kits. You can get a will kit from Whitcoulls. But of course, I'm going to encourage you to go see a lawyer and spend $300-400. In addition to having a will, thinking about the structure of your assets is really important. So should my house be in my personal name? Should it be in a trust? Should it be in a look-through company? Who are the other people that I've got exposure to? Relationship property agreements, all of that kind of stuff. Once again, not that exciting, but really important to sort out. And then the final component is around insuring my risks. So I will talk to a client and go, here is a beautiful set of projections over the rest of your life. And they're like, James, this looks great. I go, all right, Mary, let's assume you've walked outside and got hit by a bus. This is what your family situation looks like without you around. And they go, well, that's not great. What can we do to fix that? And we put life insurance in place. We make sure we're protecting people's incomes, because once again, coming back to the budget, without your income, you can't meet your expenses and you can't grow your wealth. So they're all really important components to protecting your wealth.
So true. I mean, from my experience of what I went through a few years ago with my medical condition, and then actually having my insurance not pay out. I've spoken about this a few times. My insurance didn't cover me for my condition because they found a small loophole. I was found wanting financially. I was unemployed. I was recovering. I didn't have the numbers, and then where did I go? Where was my protection? Where was my protection to protect my family just day to day, to be able to pay bills and that stuff? And I can tell you, going through that experience, the first thing I did as soon as I sort of slowly got back on my feet was get the protection. I got the protection first before any of the wealth. So in case, again, something happened, I had a full protection, making sure that all of that was put into place to the high heavens, just because from my experience.
And if I could add to that, Lawrence, yeah. I know a lot of, firstly, if you are young and you feel bulletproof, get insurance while you're young. I deal with lots of 40 and 50-year-olds who want insurance, but have this crazy thing called pre-existing conditions. Yep. And boy, is it a nightmare trying to insure them. So insuring yourself young is a very good idea. The second point is around, it's a waste of money, or it's really expensive. Firstly, I'd argue it's not a waste of money because you're protecting yourself and your family. But if there is issues around the budget and making it all work, especially if you see just an insurance broker, and there's lots of good ones, but there will also be ones who try and give you as much insurance as they can possibly give you so they get paid as much as they can. You can insure half of your income, or you can insure a smaller, getting paid for a shorter period of time of your income, or you have to be off work for a longer period. There's a way to make insurance cheaper. And of course, there's a sacrifice there, but some insurance is better than no insurance.
Yeah. Totally agree. But as you said, go to people, find out what you're trying to achieve, and please make sure as well, if you're going pure to insurance broker around the protection, speak to more than one. There's more than one option out there. There's more than one company. There's more than one way to do that, and look at your opinions as well. But this is where sort of someone like James with the financial planning and taking a look at everything end to end can guide a family member, a husband or wife or so forth, or anyone out there going, this is what you should look at. These are your options, and brings forward, so you can have that confidence and that warm, fuzzy feeling that you actually been told the right stuff of what you're trying to achieve, not because James hoping that somewhere down the line, someone's going to kick him something back. And that's not the way, right? James is, as you said in the beginning, to help families achieve what they want to do around their wealth and protection and so forth.
Yeah. And in addition to that, when you're talking to an insurance broker, and it's, because there'll be lots of jargon that gets used, trauma insurance, indemnity cover, the different types of conditions. Have you thought about this and that and this and that? Whenever you have less knowledge than the person you're talking to, the best thing you can always do is keep asking why. Why do I need this? Why do I need that? And if they're not doing the right thing by you, you will catch them out. Yep. So just ask lots of questions. But there's two parts of my job that I get a huge buzz out of. The first one is somebody who can't manage their money, cutting up their credit card. Ooh, boy, do I love cutting up a credit card. Some have said the look in my eye is somewhat concerning, but that's okay. The second is canceling somebody's life insurance or income protection where they've reached a point of financial freedom that they're self-insuring themselves. Yep. So you should be thinking, I want to work towards my goals of achieving financial freedom, so I can, and then along the way, continuing to reduce the amounts of cover, because as you get older, the cover becomes more expensive, and then one day canceling it. And I love it as well, because when you're spending money towards insurance, once you're suddenly not spending that money, what do you have? Yep. More money to invest. How good?
Yeah, it's awesome. James, as we get in sort of to the end of today's show and everything else, there's one thing I know people are going to be sitting there going, awesome insight. It's great stuff you're saying there. Talking about this plan, what is it sort of, because we're talking about investment and money, what's this all going to cost me? If I came to you and we spoke through these sort of options that we just mentioned in the show, and you put the plan to me, what's the sort of cost point going to be to myself to put this into place for my family?
Yeah, so we are quite unique where we have a very wide scope of advice. So what we charge a client will depend on what services and products they decide to use. And sometimes there's a scenario where providers will pay us for giving advice, and we will always disclose those and tell you why we think something's the best. For a financial plan, we charge $500 plus gist. The other cost is we encourage clients to do annual reviews. And that's not as much because the individual investments will need changing. It's because your life changes. So we encourage our clients to do annual reviews. We charge $250 for an annual review. If for some reason you didn't need an annual review 1 year, we don't charge you. It's just a time for service model.
And I'm guessing this is all built into the numbers anyway, right? I'm guessing the $500 up front is obviously not built in, but I'm guessing everything else that from a numbers point of view and the ongoing, all of that is all laid out. So if I'm at day one at zero and I'm going to 100 grand in 20 years time, the plan that gets me there and the acceptance of getting me there covers, all these cost points through it as well.
Yes, it does. But I am also very passionate about being transparent. So I will tell you exactly how, because I don't make my money on a financial plan fee. That's not, paying the bills and keeping the lights on. The purpose of the financial plan fee is that people take the process seriously. Once again, coming back to around our investment advice and different providers, yes, that's part of the process. And yes, it's not a fee you pay directly, but I will tell you because it's important, like everybody's dealt with that kind of person when you're like this person's doing a good job, but like they're not here out of charity. What's going on? So I think that transparency is really important.
Yeah, it totally is. And James, as we get into the end, is there anything else you want to leave the audience with tonight around thinking about their wealth or their wealth creation stuff? Anything that you want to leave them with to think about out of sort of the next couple of weeks or so month, and as well as where can people find you?
Yeah. Okay. The first bit is get active with your finances. So I'm not talking about, creating a 20-point action plan. I believe in keeping it really simple. So if I can't draw your financial plan on the back of a napkin, there'll probably be some risks and disadvantages and projections. It'll take a little bit more work than that. But if you can't say it back to me on a piece of paper, it's too complicated. Try and keep your financial situation really simple and automated. So you should be able to, and all my clients can manage their money in about 10 minutes a week because everything's automated. And just, get active, get involved, and keep it really simple. In terms of how you can see what we're up to, so we're based in the city on 41 High Street. Our website, lighthousewealth.co.nz. And then we've also got a podcast with one of our mortgage brokers, Checks and Balances, which comes up, I think we put it up every Wednesday. And it's just a 10-minute topic. So you can see a little bit about. The one that we've loaded this week is around short-term debt. So Afterpay, credit cards, all that kind of stuff.
Yeah. Awesome, James. Thanks so much. I love the insights, what you just mentioned, that like if you can't put your plan down simply, if you can't say in 2, 3 or 4 lines, what is your financial plan or expectations, you're overthinking it, or it's not the right way to go from it. And that's the sort of stuff that people don't realize, that it should be simple. It should be simple what you're expecting. So it should be, hey, I want to retire at 50. I want to retire at 60. Okay, then how to do that. And then James comes in and provides those insights. It shouldn't be, hey, when I reach 45, I want this to come in this manner. And when I reach 48, I want this to trigger in that manner. That's sort of the overcomplication sort of things. And believe you me, when you overthink those sort of numbers, there's no ways you're going to get around to it. And that's where James comes into play.
And we're human as well. As humans, we like to compare ourselves to each other, which is the worst thing you can do because you only get half-truths from people. But when you're at the barbecue and people are telling you about all the fancy stuff they're doing, which, once again, at best might be half true, you'll go away and think, oh, I need to do this, and I need to do that. And Bob's got, this cryptocurrency, but what about this index fund? And I've only got 3 investment properties. I need to get my 4th. Like, the world's going a little bit crazy at the moment.
Yeah, we've all got to, again, I can speak from personal experience. We've all got to focus on our line, what my line is, right? I can definitely say in my 20s, I went through that stuff. I was looking there and I was looking there going, why am I not doing that? Why don't I have that? And then you get to a point in your time in your life and you realize that firstly, the person over there that has everything is because that's all in debt and he's going to be screwed in about 10 years. Then you realize the person in that side of things is just has advantages for other ways. But that's good for them. Let them have that. Let them be good in that sort of stuff and focus on your own channel and your own strive of where you're going from a wealth point of view, because fundamentally they might have been doing that for 20 years and you're only on year 1. They might have started that when they were 18 years old, and now that they're 35, they're 17 years down that path, so they can do that. And that's the sort of stuff we don't see and understand when we're looking on the outside world. But that's why you got to build your plan and stick to the guns. But James, thanks so much for coming on the show tonight. To everyone else that's out there that's thinking about options around growing your wealth, how to grow it. I know I've spoken to a lot of people in the last few months outside with the property stuff that we've spoken about and everything else, and going, Lawrence, where are my options? Where can I do stuff? Where can I go further than that? James is the person to go and speak to. James and any other sort of top class financial advisor can show you, do this subtle change, come into this area, $50 a year a week will give you this in 10 years. And everything else, the compounding effect over 7 to 10 years, you're doubling your money, with good interest rates. Every 7 years, you double your money. So over 20 years, you've tripled your money with compound on top of that as well, additional. So it's just think about that and go and speak to someone that can help you, because for $500, what's $500 over the next couple of years? What's $10 a week? If you put $10 a week, that someone can go and give you a document that says, this is your plan to achieve your goal over the next 15 years. Would you not take that? But at the end of the day, it's all out there. We just have to be brave enough to be able to want to ask that question and ask for help. I can believe in me, from my experience, I had to. And I'm happy that I've gone down that path and everything, and then spoken to the likes of James and the team and everyone else that can provide those insights. But again, James, massive thanks for coming on to the show. Everyone else, as James said, you can find them up on the websites. You can find James on LinkedIn as well, social media, or across that. The YouTube Checks and Balances podcast is pretty cool that they're doing there as well. But at the end of the day, think about what you're trying to achieve in your life. Think about what you want to do, where you want to go, and make sure you have the right people guiding you through that, because you need that to be able to hit that goal. You need someone to support you. And by all means, feel free to reach out to myself or James if you have any questions. But at the end of the day, stay beautiful, stay powerful. Until next time, see ya.